Hey, what's up guys? Aaron Bennett here. In this video, going over Simon Dixon's third video out of 7. This one, Filling the Hole. This is his Celsius recovery plan. So I'm going to cover his, I think, 40-minute video and then also the highlights of the 1-hour Twitter Spaces that happened yesterday. So Simon starts out by saying, what happened with Voyager, we don't want to happen with Celsius, where FTX bid 70 cents on the dollar, and then if Voyager objects, they don't have another plan, so they're going to be forced to take the deal. We want to have another plan. Simon said that Celsius is much more complex than Voyager, and not having a plan would be much more devastating. So he did a quick recap of the first 2 videos, which I will go through. He starts out by saying that whatever happens must be regulatory compliant, and we must remove the politics that would move us into a Chapter 7 liquidation. He reminds people that the bankruptcy code says you must use the price of those assets on the day of the bankruptcy petition. So he reminds people that we're going to convert everything that is not Bitcoin and Ethereum, all the altcoins. I don't think stablecoins though. I got to ask him that. Just all the other altcoins to about 50% Bitcoin and ETH through OTC auctions. And then they're going to burn Cell, but give everyone that has Cell on the app their pro rata entitlement in Bitcoin and Ethereum. So that's about a 47.4% distribution that would go right into everybody's custody account. Now, some people have been asking me on Twitter, what does this custody account have to do with the custody and earn in Celsius right now? Well, not much, because this custody means that you actually own it. This is going to be a restructured company, which I'll get to later in this video. So when Simon says custody account here, it doesn't have anything to do with the custody and earn accounts inside of our Celsius accounts right now. So the real question again is, how do we fill this approximately $3 billion hole? And Simon talks about, which I'll talk about later in this video, a high-risk, high-return strategy with private equity and securities. And he does mention that Celsius was actually an illegal hedge fund without proper disclosures and suitability requirements. So basically what Simon wants to do is do a lot of what Celsius was doing, but do so in a legal and compliant way. So the video 2 recap, he mentioned GK8 is going to take care of custody, Bank to the Future will take care of the securities part, and then Salt Lending can take care of loans. He says we want to have one company that can offer all 3 of these services. He mentions that we all benefit from a bear market because we can buy Bitcoin and Ethereum with the stablecoins that Celsius already has at cheaper prices. So if we were to buy these assets now and then redistribute them like 50-50 Bitcoin ETH, if we can buy them for cheaper, right, that's actually better for us because Celsius does have a lot of stablecoins that is a part of their state. And Simon does mention that Christmas 2 years before the next halving is usually the worst time in the market, and that is what we are approaching right now. And he does remind people what equitability means in the bankruptcy code. Basically, if we have a 70% hole in Bitcoin, we can't just give the Bitcoin holders a larger haircut than people holding Ethereum. It has to be equitable, and that's what he wants to do. So right here is the main slide from the third video, the one I really want to cover today. So again, he's talking about how do we fill the hole, and really it's about getting into certain assets at a great time in the market, which right now could potentially be the bottom of the market. He then talks about that high risk, high return equity portfolio that meets the regulatory requirements to allow us to get out of Chapter 11 and also benefit in a diversified way in the market when it recovers. So that's what he wants to do with this slide, which I'll cover. So right here, it says creditor and investor committee. He wants there to be a fund manager where all of the assets will be managed in an appropriate way, who's an expert in crypto and the markets, and this would be their full-time job. Now, traditionally, a fund manager would get a 2% admin fee, and they would also get 20% on the upside. He does say that all of these numbers can be negotiated, but Simon is just laying out the normal numbers that happen with like TradFi and hedge funds. So here, the quarterly report, Simon says that every quarter we would get a report, basically how did all of our assets do? And then we would get a dividend, which would be 80% of the profits. Again, in this model, 20% would go to the fund manager. And also, Simon did not say that he wants to be the fund manager. So he's not saying like, yeah, pick me. Basically, he's just laying out what would make the most sense. So talking about the assets, we have venture capital assets and also contractual assets, which I'll cover in just a second. But Simon says that if we rush this process, we would be selling these assets, the mining, the GK8, and the institutional loans and other assets as well, which I'll cover, will be forced to sell these assets in an auction, and then the shareholders of whoever buys these assets will be the ones who can benefit from the upside. What Simon is saying is that we want these assets, we want to benefit from the upside. And just a note, Simon says that he is the 21st largest creditor inside of Celsius, and Simon says that is a special number for him. Obviously, we have 21 million Bitcoin, and also the pause that Celsius did on our assets in June, that was the same day his father passed away. So he says he's seeing all of this as a sign that he really needs to step in and help, and he reminds people that his goal was to help his father basically figure out why he lost all of his money in the 2000 boom and bust cycle. So this is all very personal for Simon. Yes, he is a creditor, with tens of millions of dollars in his personal account, but he's also looking at this from a deeper purpose perspective as well, having to do with his father. So if Simon's plan works, which again, I'll cover what each of these means in just a moment, we would have a patient community of creditors, meaning like us, who want to grow these assets. So Simon is really talking about not being forced to rush. If we start rushing, then we'll have to be selling assets, and we'll be selling at the bottom of the market, and that is no good for the creditors. So let's talk about Celsius mining. In this example, the creditors would own 100% of the Celsius mining operation. And later in the video, I'll talk about what Anthony, who is an expert and also a creditor in Bitcoin mining, has to say about this as well. I'll cover that at the end of the video, so hang tight. So regarding Bank to the Future really quick, I know I'm kind of jumping back and forth. Bank to the Future has been investing in the crypto market for over a decade. They invested in Circle, Coinbase, Blockchain.com, and Kraken. So they've had a lot of massive winners. Obviously, have had some duds, but the winners have way outpaced the ones that did not work out. And regarding the mining, Simon says that back in 2015, he began investing in Bitcoin mining through Bank to the Future with Peter Thiel, the co-founder of PayPal. Simon says that the fund manager right here will figure out if the current team that is running the Bitcoin mining is appropriate or if it needs to be replaced. And this fund manager will also be in charge of looking over everything Bitcoin related. So like the accumulation of Bitcoin through the miners, and also like when it's a good time to IPO, which I'll cover later in the video, as that is really the upside in this strategy. Now let's talk about GK8, which would be in charge of the custody coins. And again, going back to this initial slide in the first video, that would be the 47.4% that can be returned to us immediately. So that would be $2.7 billion. So GK8 is an already existing business that already does this for institutions, and I believe Celsius was actually using it for retail as well, or they were about to. He says that GK8 can do all the custody in a fully compliant way, and also they can raise additional capital with the fund manager overseeing that. And down here on the bottom, it says 20% BF Global. So what that means is Simon's company, BF Global, can be one of the assets in this new company that is created. Now, there were some questions on the Twitter space about what is Simon's agenda for, donating 20% of BF Global to our assets. So he did cover that, and I will touch on that a little bit later in the video. So let's talk about contractual assets right here. So these are like institutional loans that haven't been paid off. They could be a benefit for the creditors, us, rather than just liquidating them. So as more of these Strato documents come out, we're getting more insights into different companies that owe Celsius money. So that's what he's talking about here. And right here it says Chapter 11 and lawsuit claims. So this could be like litigations going on right now, and also possibly even like insider clawbacks. So if the examiner deems that there's going to be, let's say, a 4-year clawback for insiders, Simon is saying there's a way, if this plan goes through and if this plan works, that we, the creditors, can actually benefit from insider clawbacks and also some of the litigations and companies that Celsius is actually suing right now. And here talking about private equity. So what Simon did right now is went over to Bank to the Future, and he was showing that the back office of Bank to the Future, he's kind of showing the infrastructure of Bank to the Future and how it's already set up quite a bit to start doing a lot of these things. So here you can trade shares of a company. So basically, if we get equity in a company and let's say we don't want it, we can sell it on the secondary market, which is what Bank to the Future can offer. And this would be what that would look like. You have buy orders and sell orders of equity. So again, we get Newco equity and we want to bounce. We don't want anything to do with anything Celsius or Simon related. We freaking sell it, right? You can sell it for however much somebody wants to buy it. So next, Simon says that we need all of the ad hoc groups. So we have withhold, we have custody, we have loans, we have like 4 other ones that I can't think of on the top of my head. We need everybody to come together and stop arguing and stop trying to take their piece of the pie, which he says will just lead to the sale of our assets and outcomes that are not in the best interest of everybody. And taking a look at this slide, Simon really wants to figure out a way to help everybody. And these are the estimated haircuts for custody, $110 million. The loans haircut would be $402, and the earn haircut would be $2.48 billion. Now let me dive into the Twitter Spaces, which I did listen to, which was about an hour. So somebody representing loans said that Simon's plan can work if, he says, they kind of negotiate this loans haircut. So this person representing loans said there is a way for, let's say, you to have a 1-to-1 ratio between your loan, what you got from Celsius, and the collateral you put up. Everybody who has a loan with Celsius had to do an over-collateralized loan. So if you had a 50% LTV loan, you gave Celsius 2 Bitcoins to get 1 Bitcoin as a loan. What the loans person said, and I forgot his name, sorry for calling you the loans person, is essentially they want a way to make it 1-to-1. You repay your collateral and then you get your loans back. And Simon says that is something that they can talk about. Sean of Salt Lending kind of echoed what Simon said, and we need to get all of these ad hoc groups working together. Now, Anthony, who has been on many of the Twitter Spaces, he has a lot of knowledge about Bitcoin mining. He said that Celsius has 8 different mining locations, which is very good for diversification. And Anthony made some clarifications on Bitcoin mining. Some people think that just mining Bitcoin is going to be enough to fill the hole. Anthony said that is not possible. There is just no way to mine enough Bitcoin to fill a $3 billion hole. He says we want to keep the Bitcoin on the balance sheet, just like Marathon and Riot, 2 publicly traded Bitcoin mining companies. Anthony said this would be a great way for a company to get exposure to Bitcoin mining and a way where this company could go public and then the valuation can go up. So let me explain that. So we have a Bitcoin mining company and other companies want to invest in Bitcoin mining. How do you do so? Well, you can either invest in Grayscale Bitcoin Trust, which is kind of investing in Bitcoin. You can invest in MicroStrategy, which is also just investing in Bitcoin, or a company can get exposure to Bitcoin mining through a plan like this. So Anthony's saying that when this company, or if this company goes public in an IPO, we as equity shareholders of this entire fund would get the upside of that. That is the power of Bitcoin mining right now. Simon does say that this entire plan could take time, and we need time to figure all this out. He says we need a well-managed, diversified play over a long period of time. And again, I've talked about this in the video earlier about we don't want to feel like we're rushed to figure out a plan to liquidate the assets, to sell the assets, and getting Simon's plan approved would enable all of these parts to be figured out. Simon says that the worst case for the Bitcoin mining company is that it doesn't work out. And then all the Bitcoin that they have on their balance sheet that just like Marathon and Riot mining keep on their balance sheet to increase their valuation, we just sell the Bitcoin. So the worst case scenario is we liquidate the Bitcoin and all that Bitcoin would come back to us as equity holders in this fund. And Anthony then says about Bitcoin mining that in a bull market, mining companies do way better than the actual spot price of Bitcoin, and that's what we want in order to fill this $3 billion hole. So Simon was clarifying more about his BF Global 20% donation into the equity, and it was a little confusing for me. I don't fully understand it, but basically it's a way for his company to do well, but also it's to help the creditors. And really what I took away from this Twitter Spaces is that if another company wants to do a better solution or propose a better plan, feel free, he said. But he is trying to help himself as a creditor. Also, he owns Bank to the Future. So yes, there is some self-interest there, but that's okay. I'm okay with that. Everybody has self-interest at the end of the day, but he really wants to help the creditors as well. Somebody asked, can unaccredited and accredited investors benefit from Simon's plan? He says yes, and we'll cover that in future videos. And to summarize the aspect of this entire fund, so this new company would, have the custody, the loans, and the mining and all the assets, everything I've talked about. So essentially, if the mining goes public, the fund would get money, and we, creditors or investors, I should say, equity holders in this fund, would all get distributions because we have equity. So this is a super diversified way to gain exposure into different parts of the crypto industry, and especially as the next bull market happens, which most likely it will. But Simon does say that this could all go to crap and Bitcoin can never recover, but most likely that's not going to happen. So somebody asked, what does Simon get out of this? And I think this is a great question because people are skeptical of everybody right now. We were lied to for years from the current management of Celsius, and people are very skeptical, naturally, of Simon's self-interest in this plan. And he does say that, Bank to the Future would get 300,000 new customers, which would increase the assets under management of Bank to the Future, which would help him. Simon is not lying, or he's not trying to skirt around the issue of his plan helps him as a creditor because he has tens of millions of dollars. It would help the retirement plan B, which invested in Celsius through Bank to the Future, and it would help Bank to the Future in the future, getting a lot more customers. So again, Simon is not saying, oh no, this would never help me. He's saying, yeah, it would. But again, if somebody has a better plan, propose it and we'll discuss it. And finally, the last thing he says is he's hoping by March or April of next year, we should probably get some of the funds back. So that would be like that 47.2%, I believe. Yep, 47.4% of the funds should get back, or some of that should get back into our accounts where we can swap it, sell it, and if we want to say peace out, we can do so. So guys, that's it for the recap of video 3. I will be coming out with the video hopefully tomorrow of video 4, which was recorded today, but I don't have enough time to cover that one as well. If you want to follow Simon, which I suggest you do, you can follow him on Twitter, which I will include in the description below, and also his YouTube station link I will include as well if you want to watch these videos live or the entire video if you have more time. All right, guys, thanks for watching. Till next time, talk with you soon, and bye for now.